Well, hello everyone, and welcome to your Daily Five. I'm Joe Duarte from Joe Duarte and the MoneyOptions.com, author of the bestsellers Options Trading for Dummies and the Everything Investing in Your 20s and 30s. If you like what you hear today, please consider a free 2-week trial to my service, Joe Duarte and the MoneyOptions.com. Let's get started. Today we want to talk about how the smart money finds value against the crowd. So the big question is, what if Warren Buffett was a chart guy? And that's kind of the mindset that we want to keep when we go through this presentation. So our goals for today are, number one, defining value investing with a technical twist. Number two, defining value price charts. And number three, trading the perfect value price chart. So step one, we're going to define value investing with a technical bent. The practice of investing in areas of the stock market which offers the potential for growth before the market recognizes the opportunity. In other words, we want to look at stocks that are on the verge of moving higher, which the market has not recognized yet. Traditionally, value investing involves the use of metrics such as PE ratios and other fundamental approaches. But we're going to go past that and go straight to the charts. So today's focus is on technical analysis and contrarian criteria, which will help us find value. And specifically, you want to look at companies that make necessary products that are actually doing, that are actually in demand, but that management hasn't quite figured out how to get that message across and how to execute. So we want to look for companies that have some little bit of negative press. The business is a little bit troubled, and there's poor management and execution. That's what create values. So first thing we want to do is obviously always trade with the trend. And of course, we always look at the big picture, the market's breadth. And so we have the New York Stock Exchange advanced decline line right here. And right now, it's telling us that the market is in a uptrend because it's above the 200-day moving average and the 50-day moving average. More importantly, the CBOE volatility index is heading down, which means that there's not a whole lot of put buying. And that means that the bears are pretty much sleeping right now. Of course, RSI tells us whether the market is overbought or oversold, and in this case, it's not quite overbought yet. So we still have some room to go higher here, and because right now we're in the November-December bullish seasonal period, this market could definitely go higher. So obviously, we want to confirm this with the S&P 500, and if we look at our familiar indicators, we see that, yes, the S&P 500 is up above the 200-day moving average, above the 50-day moving average. We have a bullish short-term crossover here from the 20-day going above the 50-day. And, of course, the market is nearing and making new highs. And it's getting through all of this resistance here, as you can see with this volume by price cluster here. So the market's pretty strong right now. And, of course, you see accumulation distribution is rising as short sellers get out of positions and the buyers are in. The only thing that might hold this market back a little bit is that it's a little bit overbought on the RSI as it pertains to the S&P 500. Of course, always look at strong and weak sectors by your candle glance analysis. And I love the 310 S&P Selector ETFs PDRs candle glance, which is a prefab from StockCharts.com, and this is where I get a lot of my ideas, and I highly recommend that you get this set up on your trading rig. Now, step two, want to define those value price charts, and usually it's a well-known company with a product that the public can't do without, which Wall Street is ignoring, and you want to look for that base formation. Usually we're looking here for choppy trading patterns because that tells you that there's indecision, there's backing and forthing, and that's what builds value, because the longer it takes for a stock to break out, the more value that builds up. In other words, we want to look for companies that are gaining traction quietly as they chop around. And then you want to start looking for that short covering, then the buyers coming in, the breakout, and the momentum run. So step three, and as I discussed in my previous video, the perfect price chart, which you can find by searching YouTube or StockCharts.com, and I highly recommend that video. There's a base formation, stage one, the panic bottom, stage two, the short covering, buyers coming in, then there's a breakout in the momentum run. So let's look at some value sectors so we can really illustrate which ones of these make sense and which ones of these don't make sense. the first thing you do is out of favor. Healthcare is out of favor. These companies are struggling because there just isn't enough money from governments and insurance companies right now and the post-COVID period to pay for a lot of these expensive drugs. So a lot of these pharmaceutical companies and medical equipment companies are struggling. And you can see there's a lot of chop in this chart. It's the XLV Healthcare Select SPDR ETF is struggling to get above that 200-day moving average. You can see that accumulation distribution, still a lot of short selling going on. Unbalanced volume trying to bounce back, responsible for this, but it's not doing very well. So there's value here, but this one we don't necessarily want to get into, but we want to keep an eye out for this 130, 134 area, because that's where the big resistance is. If it gets above here, we might have a whole different ballgame, and all this value that has been building up down here will be worthwhile taking a chance on. So step 3, you want to trade that perfect value chart. So you want to look for that point where the stock is about to break above the top of the base. Obviously, you want to make sure that support holds. You look for those positive money flows and what I call Duarte's triad: Bollinger Bands in the right configuration, accumulation distribution in the right configuration, unbalanced volume in the right configuration, and that volume by price indicator, which is, in my opinion, priceless. Then you want to be able to pull the trigger. So let's review a perfect chart from my prior presentation. We saw that Apple fit the criteria for a perfect chart. And so what are we looking for? First, you see that big cluster volume by price. That's price resistance. A breakout above this big a number of volume by price bars tells you that the stock is very strong. So even though Apple's not a traditional value stock, it was building value in this area. And you can see that it finally crossed above a 200-day moving average. And right here in this little rectangle, you can see that it held that 200-day moving average and took off. And consequently, or at least coincidentally, you had big rise in unbalanced volume, short sellers getting out. Buyers actually came in at the same time. And so that's what you want, because that's the prelude to this. Okay, so value builds up. Then you have the price congestion, and you can see that during that price congestion, those Bollinger Bands were getting squeezed. That tells you that the big move is coming. So let's look at a more current example of something that is building value that may be worth looking at carefully: the transport sectors. Right now, the news on transports is negative because you have a lot of trucking companies that are going out of business. Railroads are struggling. The economy may be slowing down. And so inventories are high. And so transportation is kind of a no-no right now. And Wall Street is very negative on it. But guess what? There's value building up here, just as it built up down here. And again, if you go back to that Apple chart and review the criteria, you see that big volume by price bar and the 200-day moving average, the Bollinger Bands, accumulation distribution rising, unbalanced volume finally picked up, and you had a big breakout. So you want to look at this cluster, this choppy trading here, as value. And guess what? It's starting to act the same way again. More importantly, right here, accumulation distribution is starting to rise and unbalanced volume. So you want to look at that 76 area, because that's where the 200-day moving average is. That's where that volume by price bar, that tells you that a move above here, the market will have finally realized that value built up to a point where it's worth taking a chance. And of course, if you want to decide when to sell, then, after you had a big move like this, you can use your 20-day or your 50-day moving average as selling points. And if you have a big position, you can get rid of some of it here, and you can cash out of the rest of it in this general area, which corresponds to accumulation distribution and unbalanced volume falling. So you want to look at things in a little bit of a different light here. And in the past chart, we looked at value trading. Let's review that. It was out of favor. There's a choppy trading pattern, and of course, a 200-day moving average, and so on and so forth. Well, a stock that meets the criteria that is more current is Phillips 66. okay? And this is one of those hapless oil stocks. Way back here, the price of oil began to rally, and Phillips 66 just didn't go anywhere. That's because management can't seem to get its act together, okay? But again, you're looking at that criteria. You have the volume by price clusters, you have the choppiness, you have an out of favor company, and eventually something starts to happen. And it began here in July, where the accumulation distribution started to perk up. On balance volume picked up in a big way. The price of the stock moved higher, and we've had a consolidation pattern and now a breakout. So what's this all about here? Well, it seems like a hedge fund was building $1 billion position in the company. They recognized the value here. They moved in quietly, and now they made the news public. And guess what? After a similar consolidation pattern, the stock has broken out in a big way. So do charts tell you about value? Absolutely. And the key is the volume by price clustering, the choppy trading pattern, the stock that just doesn't go with the trend. The laggards are often great places to keep an eye on things. And then when you get those bullish criteria, such as the rising ADI, the rising OBV, and the move above that 200-day moving average and the volume by price cluster, tell you exactly that the value has been recognized. So let's put it all together. You want to always trade with the market trend. You want to find those out of favor stocks that are forming bases. You look for that value. Companies have necessary products. Phillips 66, gasoline, diesel fuel, natural gas. Come on. Right now, even though everyone's driving EVs, you still need those products. Negative press, the company just can't get anything going. Oil is a dirty fuel, so on and so forth. Troubled businesses, management can't get its stuff together. Poor management execution. Again, if you analyze those money flows, you can see that the smart money was moving in. Big hedge fund was building a long-term position, and now they made it public. And guess what? They're pulling the trigger. They're probably selling into this strength a little bit. But nevertheless, you know, that's what happens. Somebody with big bucks recognizes value, comes in, and then the news break out. And of course, you want to let that market define that support. You don't want to sell before there's a significant break or a decline or move below those sell points. And you want to sell when that support is broken. Well, that's all I have for today. I'm Joe Duarte from Joe Duarte in themoneyoptions.com, author of the best-selling Options Trading for Dummies, the Everything Investing in Your 20s and 30s books. Thank you for your attention. If you like what you see here, consider a free 2-week trial to my website, Joe Duarte in themoneyoptions.com. If you want extra material, extra content that I produce exclusively for this website, it's called Buy Me a Coffee. Here's the link. It really helps me if you buy me a coffee. Not only do I like to drink coffee, but it helps to defray the expenses of my website. And I really appreciate all of you that have contributed. So you can have a look at things like the QQQ review, my weekly real estate update, special reports and in-depth analysis. And there's all kinds of new stuff that's coming on there all the time. So Joe Duarte in themoneyoptions.com and buy me a coffee. Remember, as always, trading is uncertain. Be prepared.